Hey guys, it's Tim Royster here with the Royster Hearth Group Compass, and I'm here with Pat Holland of Embrace Home Loans. There are seller concessions coming back.
Yeah.
So tell us, Pat, how does this work?
The big word or the phrase is, it depends, but that's where the conversation with the needs and the wants of the buyer and the time frame of home ownership and speculating on if the rates are going to come down next year. Today, it's Sunday afternoon. We've been cranking all day. You and I have been on the phone several times. We negotiated a couple deals already today for our clients. But the big strategy was this past week when we were working with one of our new home buyers. There's the opportunity for this client to either take a slightly lesser sales price or seller concessions. The home was on the market a little bit longer. It was on the market for 14 days. They were considering a price reduction, but we crunched the numbers and we'll just talk about the sales price, but it was $849,900. Should we have kept the price or go at $850 or go $830 or take the $20,000? So in that instance, we showed our client that the difference between an $850,000 purchase price and an $830,000 purchase price was exactly $114 a month.
So wait, so financing off of a $850
versus so putting 10% down.
10% down between, so $850 or $830, it was $100 and how much?
Only $114.
Okay.
So,
right.
And the cash to the table for the borrowers, 10% down of $850 was $85,000. 10% down of $830 was $83,000. So it was a difference of $2,000. Not that big of a difference.
Sure.
So, but the big thing was, they thought there was going to be a more significant payment difference between $850 and $830.
Yeah.
It was exactly $114. The sellers agreed to $20,000 in concessions.
Okay.
So after crunching the numbers with the borrowers, we decided to kind of build our own escrow account for our clients. So we put that $20,000 in a nice little piggy bank for them. And if they really wanted to, they could take $120 or $114 out of there. And, over time, if you do the math, you take 114 divided by, 20,000 divided by 114, that's going to pay 150 plus payments over the months to come. But the speculation we were using is there is a very, very good chance we are going to refinance next year. And instead of even buying the rate down 1/4 of a point or 3/8 of a point or even using a buy down, we decided to use the seller's money to finance our closing or our refinance next year.
Wow.
So for example, if the rate goes from 7% to 6 1/4, that's a 3/4 of a point drop. The borrower was going to benefit about $458 a month.
That's big.
So so that was 3 or 4 times what the difference in going from an $850 to an $830. Now, granted, if the rates don't fall, did we lose anything? No, we still have $20,000 of the seller's money that they're putting in an escrow account. We can put it in there. Yeah, we find an account that might be making 3% compounded, okay. But the clients decided that they felt like, okay, I would rather have the $20,000 that I don't have to bring to closing now. Maybe there might be a couple things that they want to do for the house. But every indication when we come out of a recession, with the one that we're in right now, we are in one, that we're going to see interest rates drop a little bit. And the likelihood of their rate being lower than what it's going to be when we go to closing on, I think it's the 30th of November, is very high. But either way, they were very happy with the home price. They had options. We gave them all the options, and they picked the one that was best for them. And we're going to go to closing. They're bringing $20,000 less. We're going to keep talking. We're going to set them up with an alert to watch, when rates start to move a little bit. So we're going to be letting them know that, hey, look, there's a good opportunity. And oh, by the way, if there's any bit of left, let's just say, it took 1.5 years. Well, they're still going to have $18,800, give or take, or $18,500 in that kitty. We use part of it to refinance. And if they want to put an extra $10,000 and actually reduce their principal at that point, well, there's another maybe $80 their payment will drop. So it's all about strategy. It's all about planning, and more importantly, it's about options and knowing what your options may be.
What do you think right now? I mean, I keep using the words, there's an opportunity, but there's also a challenge.
Yes.
And our goal as professionals in real estate is to be able to explain what the challenges are, but then show what the opportunity is. Right now, what's the challenge? Challenge is the interest rate.
Yeah.
But the opportunity is that there's less buyers in the market.
Absolutely.
Right? And so you're talking to people that are getting contracts ratified, and those are the people right now that are making a decision based off of good knowledge to say, I know what this looks like for me, potentially with a refinance, or how long I'm going to live in the house.
Well, and more importantly, they're okay with the payment as it is right now.
No matter what.
No matter what.
Yeah.
And the thing is, they are, 6 months ago, 7 months ago, and these are clients that we were working with that were competing and getting frustrated.
Yeah.
And now yes, their payment unfortunately has gone up about $1,200 to $1,300 more than it was a year ago with the interest rates, but they were in a position where they still needed a house. They were tired of paying somebody else's rent. By the way, their rent was going to go up $240 going into next year. So they just said they've had it. So and now they have, I don't want to be a tax person here, but they now can itemize their tax returns moving forward, and now they actually own something that's going to potentially appreciate. Well, you just need to know what options you have.
Yes.
I mean, and sometimes, yes, have we seen a few of our clients kind of go to the sidelines a little bit? Absolutely. And they're just, affordability is, it doesn't matter if you're going to the grocery store. Maybe you don't get everything you go to the grocery store for. Maybe you make a couple changes here and there in your overall finances for the holidays and travel. And so everyone's making adjustments right now. But I will say, the moment we do start to see the market turn, I do believe all those people that were on the sidelines, they're going to re-engage. And we still have a problem of inventory.
Yes.
So it's not like all of a sudden we just have a ton of inventory, like it's just magically the problem. It's still there.
Yeah.
And in fact, when it happens again, there might even be that pent-up demand that causes the same thing with home prices just to shoot straight up again. And I don't know if you want to touch on that a little bit.
A little bit. I'm thinking about this kind of opportunity right now for potential buyers. I think first-time home buyers are the ones got pushed out because they didn't have enough money down, or they didn't want to take on the risk of waiving everything. But we did an open house last weekend, and 6 of the 8 people that came to the open house, they all had a home to either sell or rent out.
Oh, contingency.
And so I told them, this is your opportunity, like right now, where you can actually use that home sale contingency or rental.
Or rental contingency. We've got another client right now that you're in the process of getting her home. I don't know. I don't know much on the listing side for rentals, but I know we've already talked about it. She does have to rent her place out in order to buy. But that, with the rentals, people are looking for rentals left and right now, and especially where hers is. It'll be easy, but having that little contingency there. We're seeing them.
Great.
I had 2 closings this month that had home sale contingencies.
Amazing.
It was great.
Right? Yeah. And we did a few during the pandemic, and it made it work, and really just it gave assurance to the listing agent and seller. However, if you have 10 offers,
we've got no chance.
You don't have a chance, unfortunately. This is how it is. And right now may be the opportunity. So, inventory's down. We really don't see it getting much better getting through the next year. I feel like we're still going to have low inventory levels, just basically because people are staying in their homes longer.
Sure.
They refinanced at 2.25% a few
people are still
years
married.
Ago.
Some people are married to their rate right now. They love that interest rate.
And I just read an article that even though this part of the market, real estate market, has cooled, home renovations has not.
Correct.
It's still going up. And so that just tells me, as someone in the industry and as you too, that there's not going to be the inventory. They're actually living in their homes longer and just making up the updates. But for everyone else that needs to buy a house, just letting you know that we still see that the inventory levels are going to be rather low going into 2023. So, what does all this mean?
If home ownership is something that you have planned for your near future, the sooner you can get in touch with the professionals that are going to be working with you. And I put a video out not too long ago, Tim. It's about having a winning team. Somebody that really is in it for the long term, because buying a home is not a click here, get a house. It truly is a process. Understanding what you're trying to do now, where you're going to be maybe 3, 5, 7 years, and is that house or is that home going to be part of your overall wealth portfolio for today and tomorrow? Because as we all know, real estate is the single biggest portion of an individual's overall wealth portfolio. Let me rephrase it. Most individuals, that the house happens to be that biggest sector of one item of their portfolio is typically real estate. So knowing that you're in the right program, that you have options with it for today and tomorrow, that you have a place, shelter for you and your family. It's all about planning, and it's about knowing what the options are. And again, going back to affordability, making sure that whatever loan program that we're putting them in, whether it's an adjustable rate mortgage, whether it's a fixed rate product, that they are protected for short term and long term. So it's all about planning. Get your winning team, start the process early, check the boxes, feel comfortable with what you're doing, make sure the price range is in their comfort level. I know you'll find them the right house depending upon the area. And just that way, when we know, we just hit the ground running hard, and when the opportunity is there, we can strike.